Good evening, students. Welcome to your class this evening. This evening we will be covering bank reconciliations and adjustments. So with me this evening I have Tsecho, Tendo, and welcome.
Yes, thank you so much, Tracy, for opening up. As Tracy has said, welcome everyone. Um, we are going to start in the interest of time, and just to outline how the class is going to go, we're first going to start with a bank reconciliation question that Tracy will be taking us through, and then from there we're going to do the year-end adjustment question where Tendo will be taking us through. And then in terms of questions, can I ask if the class is being recorded?
Yes, it is.
Okay, thank you so much. And then in terms of questions, we will be looking at the chats. So if you have any questions as the presenter is going through the revision question, you're more than welcome to ask the questions. And then once Tracy is done, we will afford about 15 minutes before Tendo starts with the next question for students to ask questions. And then we will limit it to 15 minutes in the interest of time so that Tendo can start with the question. And then from there, we will afford everyone the opportunity to ask questions, both on the first and the second question. That is to afford those who did not get a chance to ask on the first 15 minutes questions. Then you'll be afforded an opportunity to ask those questions right at the end of the class. So please, please, please make sure that you write your questions down. Make sure that you keep a notepad next to you so that you don't forget the questions when we do reach the end of the class, where everybody's going to get an opportunity to ask questions on both the first and the second questions. Okay. I will now hand over to Tracy, and I'm going to stop sharing. We hope you do get to learn during the lesson, and you do get to prepare well for the upcoming exams, and we wish you all the best. Tracy, are you there?
Thanks so much, Tsecho. Can I share my screen? I'm here. Can you hear
Yes, you
me?
may share your screen.
Can you hear me?
Yes, we can
Yes,
hear you,
Tracy,
Jen.
you're
Okay,
audible.
perfect.
We can
Thank
hear
you.
you.
Okay, students, so I'm going to be going over the bank. I did actually just prepare a few slides just to quickly revise. I'm not going to spend lots of time on revising theory, but I do think it's important that we understand what is the point of a bank recon, because lots of the time we miss the point and therefore we don't necessarily know how to answer. So if you do have questions or anything, as Sejo said, we're asking questions at the end, but I am sharing my screen, so I can't see if there are any hands. Okay, so as we said, we are going to go through bank reconciliation specifically. So when we hear the word cash, so we usually think of coins or banknotes or anything like that. But in accounting, the definition of cash is actually broader, right? And cash refers to anything that can be used immediately to pay for things. That can be things like your physical cash, your coins, or your notes, or as we know it today, our EFT transfers, which is the most common way that we obviously make payments today. Also credit card payments or mobile payments using our apps like our Apple Pay, our SnapScan, Zapper, etc. Or even e-wallet payments where we make payments to people who don't necessarily have bank accounts. So the world is clearly changing and we are using more cashless means or ways of making payments. But that is essentially what cash refers to. Okay, so what are cash equivalents? So these are not actual, it's not actual cash, but it's items that we have that are very easily convertible into cash. And this is usually within a 3-month period. And this can be things like a short-term investment that can be quickly converted into cash. For example, a savings account or a 3-month investment fixed deposit. So cash and cash equivalents are shown on your balance sheet or your statement of financial position, and that is shown under your current assets, which means that they are expected to be used or converted into cash within a year. Okay, so how do we know this as students, or how do we interpret this? So we have our bank statement, and on our bank statement, we see a whole lot of receipts and we see a whole lot of payments. And when we record it in our accounting records, we record it in a book called the Cash Receipts Journal. So this is where we record money coming in. And then we also have a cash payments journal where we record all our money going out. So this is what I wanted to get to. What is a bank recon? So students, you will notice that we are reconciling our bank account in our general ledger to our bank statement, because lots of the times there is a difference between the balance in our general ledger and the balance on our bank statement. So this is where your reconciliation comes in. A bank reconciliation means that we are comparing our business records, for example, from our CRJ, CPJ, and our previous month's recon, with our bank statement for that same period. And what is the point of this? It is to see if we made any errors or if we have missed any transactions. It's essentially just to confirm that everything was recorded correctly. And usually bank recons should be done on a monthly basis. So why do bank balances not always match? Meaning, why does the balance in our ledger not always match to our bank statements? So sometimes it can be that there's a deposit that is still in transit. For example, there was a customer paid via EFT on the last day of the year, let's say, and that customer maybe uses a different bank account, and the bank payment may only show up on our bank statement in 2 days' time. So that deposit obviously then does not show on our bank statement. So there's going to be that difference between our accounting records and the bank statement. There's also a check maybe that wasn't cashed, or the bank added bank charges or interest at month end, which we did not record yet, or there were mistakes perhaps made by the accountant. So that's essentially why we do a bank recon every month. Then there are steps that we need to follow within a bank recon. So first step is to start with last month's reconciliation. So we need to see if there was anything that was missing in our bank statement then, but it appears on our current bank statement now. So there may have been outstanding deposits or outstanding receipts that did not appear on last month's bank statement, but it now appears on our current month's bank statement. So that is step 1. Then step 2 is where we compare our CRJ, so our cash receipts journal, and we compare all our receipts in our accounting records with all the credit amounts on our bank statement. Okay, so when we look at our bank statement that we receive, we will notice that all our income is on the credit side of the bank statement, and all our expenses is on the debit side of the bank statement. So we then compare our cash payments journal to all the debits on the bank statement. And students, this is also where I just want to reiterate that we need to, at this point, also think of it this way, because I know you might be thinking in your mind, okay, but expense should be shown on the credit side in my bank because my bank is getting less because it's an asset. So now I just want us to get this picture very clear in our minds. So in our accounting records, when we are recording our transactions, and we are recording all our bank transactions in our accounting records, yes, we think of our bank account as our asset because that is money that the bank owes us. Essentially, the bank is holding our money on our behalf, if I can describe it like that. So all money that comes into the bank account is an asset to us. So when we record it in our accounting records, you are correct in thinking, yes, my money is coming in, so my asset is increasing, and my asset is increasing on the debit side. And when I'm making a payment in my accounting records, yes, money is going out of my bank account, and my bank account is getting less, so that's why I am crediting my bank account because my asset is getting less. But when we think of it from a bank's perspective, so now we're thinking of it from the bank's perspective, just think about it. You get your salary at the end of the month, you get it in your bank account, but the bank has received it essentially on your behalf. So the bank owes you that money. So when you go to the ATM and you go draw that money, that is when you are getting that asset. But when it's received on your behalf on their side, essentially you are almost like their creditor because they now owe you this money. So that is why from a bank's perspective, they are holding our money on our behalf. That is why a what is this? A receipt will be recorded on the credit side because they owe the customer that money, and a payment they record on the debit side. So I hope that makes sense. So you need to think of your bank account from your perspective as the business, and then also from the bank's perspective. So that's what we're doing in step 2 and 3. We are comparing what we have in our CRJ to the credits on the bank statement. And the credits is the money that is received. In step 3, we are comparing our payments to the debits on the bank statement. And that is all the payments that is going out of our bank account. Then also, if something appears on our bank statement, but not in our accounting records, we must then record that in our CRJ or CPJ because there could have been bank charges or, for example, EFTs that were not or that appears on the bank statement but not in our books. We then need to add that to our accounting records because essentially our accounting records is then incomplete because it appeared in the bank statement but not in our accounting records. If something appears in our accounting records but not on the bank statement, that means our accounting records is complete, but our balance obviously doesn't agree to our bank statement. And that is where we need to add it to the bank reconciliation statement. So 2 very important things I want us to remember is that a favorable balance in our account, in our accounting records, we will show that on the debit side because that is an asset to us. A favorable balance on the bank statement side, on the other hand, will be a credit balance. Why? Because they owe us that money. If we are in an overdraft, or we have an unfavorable, another word for overdraft could be an unfavorable balance, meaning that we owe the bank money. So we are using money that's not ours. In our accounting records, we will show that on the credit side. And conversely, an overdraft or an unfavorable balance to the bank will show on the debit side on the bank statement itself. Why? Because we now owe the bank money. We are using their money essentially. So that was just the theory that I wanted to revise. I then want us to go through a question. And I know this is one of the questions in your in one of the assessments that you had. And I'm specifically going through this one just because I also want us to look at the required and what is important for you to look out for in the required. So I'm just going to share my screen. Okay, so can everyone see the question?
Yes, we can.
Yes, Tracy, we can.
Okay. Okay, perfect. Okay, so it says the following information we received for December. Okay. And they have given us a bank reconciliation statement for November 2023, right? So it starts with an unfavorable balance according to the bank statement. They give us outstanding deposits, they give us outstanding EFTs, a correction of error, and an unfavorable balance according to our bank account. Okay. So that here where it says unfavorable balance as per the bank account, that means the bank balance in our general ledger account. So now we read, I just want to go to the required so we know how to read the information in the question. The required says complete the following in the accounting records for the month ended 31 December 2023. So we need to complete the cash receipts and cash payments journal, the bank columns only, and we need to total them up. For December 2023, we then need to also complete a bank account in the general ledger, and we need to balance it. And then we need to prepare a bank recon as at 31 December. Okay. I also want us to take a close look at the instructions. So it tells us we need to use a full stop to indicate any decimals. So students, we cannot use commas or anything else. The instructions is clearly telling us that we need to use a full stop. Also round off to the second decimal after the full stop. So that's important. We can't have 3 or 4 numbers after the decimal because then our answer is also going to be incorrect. An entry on the credit column in the bank recon must be indicated by using a negative sign in front of the amount. So that is very, very important for us to note. Because if we know what must come in the credit column in the bank statement, we know, as per our instruction, anything that must go in the credit column on the bank recon must have a negative or minus sign in front of it. Okay, so we shouldn't be confused because if we know what is on the credit column, we know we must make a minus. An entry in the debit column of the bank recon must be indicated by the amount without any sign. So what does that tell us? Anything that's in the debit column must have a positive sign. So I do understand from a study point of view that when you study a debit and a credit, that you may be confused in your question when you get your question now, where they're telling you to have pluses and minuses, but just tell yourself calmly, okay, if I know that something must be in the credit column in my bank recon, that means I must just minus it. And if something must be in the debit column, that means I must have a plus. Okay, so now we understand our instructions and what we must prepare as well. And so now we work through our information. So they gave us last month's bank recon. Okay. Then they told us that the following appeared in the cash journal, but not on the bank statement. So that is very important. Because if something appears on our cash journal, but not on our bank statement, then we know, okay, that must go into our bank reconciliation. So that we already know from point blank, those 2 line items must go in our bank recon. A EFT number 210 and 212 appeared on the current bank statement for December. So remember, our steps in our reconciliation was, step 1 was always to start with last month's reconciliation.
Tracy?
Line items appeared on our current bank statement.
Tracy?
Yeah.
It's Tseho here. There's a
Yes.
comment if we can make the screen bigger.
Yeah.
I'm not sure if it's possible on your side. Or maybe zoom in into the question.
Oh, you want to zoom in to the question.
I think they're struggling to read. Yes, that's better. I'll
that
just
better?
get confirmation from the chat as well if that's better. But if you want to see the full screen, you can pop it out. There's a pop out at the top of the Teams meeting screen where it says pop out so that the question can pop out. Thanks.
My goodness. I don't know. I'm using my second screen now.
No. The instruction is to the students to say if they want it as a full screen on that side, they can pop it out. There's a pop out function. And they're asking that you slow down.
Okay.
Yes, I think we can continue though, but I think the pace is fine considering the time constraints. Thanks.
Okay, perfect. Okay. So just looking, when we think about this systematically, each sentence that we go through, we're going to think about this systematically, okay? So the following appeared in our cash journal, but not on the bank statement. So if something appeared in our cash book, but not on our bank statement, we know that must go on our bank reconciliation. So these two line items here, the outstanding deposit and this EFT must now appear on our bank recon. So we're going to park that there for a little while. 110 and 212 appeared on our current bank statement for December. Right. So at the top of our question, we received the November bank recon. We had outstanding EFT number 210 amounting to 3,500 and number 212 amounting to 1,800. So those two line items did not appear on the November bank recon or on the November bank statement, sorry. That is why it appeared on the bank reconciliation. But now they tell us in the question that those two line items did appear in our current bank statement. So therefore, there's no more timing difference. And those two EFTs do not need to go back on our December bank recon. So we'll do nothing with those. The error made by the bank during November 2023 was corrected on the bank statement for December 2023. So they're telling us here, the credit correction of error of 250 Rand, that was corrected in our December bank statement. So we do nothing with that. So now we know, okay, 210 was reflected, 212 was reflected, the error was reflected. So those three line items from the November bank recon have now all been cleared in December, right? The outstanding deposit 205 does not appear in the current bank statement for December 2023. Okay, so we had an outstanding deposit 205 of 7,500 Rand, and that appeared on the November bank recon. And they're telling us in the question that this deposit does not appear in our December bank statement. Yeah, on our December bank statement. So what does that mean for us? That means that that outstanding deposit will then once again appear on our December bank recon. So now already from reading our information, we know those two line items goes on our bank recon. This one here goes on our bank recon, and those others have cancelled each other out. Now we go to an EFT for 3,550 was reflected in the bank statement, and this payment is not related to, let us see, related to EFT 217 for 1,500 to NCA for stationery purchase. Oh no. Did I cut this off here now? And EFT for 3550 was reflected in the bank statement. Oh, I think it's supposed to read that this amount does not relate to the business, to their specific business. Yes. So that means an amount was deducted from our bank statement that does not relate to our business. So that means we need to correct it in our bank reconciliation. Then we add EFT 217 for 1,500 to NCA.
I think we need to go to number 5 because you just read number 4, which is an EFT. No, go down a bit. An EFT of 355 was reflected at the bank. Yes.
Oh, yeah.
So now we
Sorry,
need to go to number 5. Yes.
It is not related to the bank statement. Oh, okay. Sorry. Yes, you're correct. This is when you take screenshots from the students. Okay. Okay, so we're number 5, sorry. So a stop order for 450 Rand in respect of insurance paid to insurers was cancelled by 30 June, and the amount was erroneously entered in the cash payments journal during December 2023. Okay, so that's an error that we're going to have to correct in our CPJ. We then have an EFT of 215 for 4,300, and it appeared twice on the bank statement. And that we're going to have to correct in our bank recon. Then we have an EFT payment to solid traders in settlement of our account of 16,015 Rand. And the bookkeeper incorrectly entered this amount as 16,195 in the CPJ. So that clearly tells us a correction in our CPJ needs to be made. The bookkeeper omitted to enter an EFT payment which was made in favor of a trade payable during December 2023 for 2,800. So this payment appeared in our bank statement, but the bookkeeper did not record it in our CPJ. So that means we need to record this in our CPJ. We then have another EFT payment of 19,950, and the bookkeeper incorrectly entered the amount as 17,250 in the CPJ. So once again, we have a correction in our CPJ account. They then give us balances and subtotals as at December for our CRJ, CPJ, and then an unfavorable bank statement balance. And then the following appeared on our bank statement, but not in our cash journal. So these are amounts that probably appeared at the end of the month on our bank statement, but the accountant obviously never recorded it. So this must be recorded in our CPJ. So if we go back to our required and we remember what they asked us to record our CRJ as well as our CPJ. So now we could see just from reading our information that we had so many corrections that we needed to make within our CPJ. So how would we do this? So we start off by the amount that they give us, the 217,720, right? So let's just go to our CPJ. So we're going to start with the 217,720. They then tell us in the question that there was a 450 Rand that was incorrectly recorded. Sorry that I'm moving around like this on the screen now. I wanted to use this question just because I know it was something that you guys had received in one of your assessments. Let me just see where they spoke about here. So there was a stop order for 450 in respect of insurance paid that was cancelled. So the amount was erroneously entered in the CPJ. So that means we recorded an amount in our CPJ that should have not been recorded because it was cancelled. So it wasn't deducted from our bank statement, right? So that's why we needed to subtract it, because that 450 was included in that total payments there, but it wasn't the payment that was made. So that's why our payments need to be made less. There was also a correction of a supplier that the accountant incorrectly accounted for. So it told us here that an EFT was made to our account of 16015, but the bookkeeper incorrectly entered 16195. So the bookkeeper went to go deduct more than what our account actually was. So once again, we need to reduce our payments with the difference between 16195 and 16015, because the payments need to be less than what it actually is. Here, where it says the bookkeeper omitted an EFT, that means we need to add it to the payments of, because the bookkeeper totally excluded it. So it wasn't included in that 217 at all. So that's why we're adding it. There was also a correction of a payment to a supplier. Let us just go see what that was. So it says here that we made a EFT payment of 99.50, but the bookkeeper only recorded 17,250. So the bookkeeper recorded an amount that was too little. So we actually needed to record 19,950 and not only 17,000. So that is why we are increasing our payments by the 2,700 Rand, because included in that 217 is only the 17,000 when it should have been the 19,000. So that's why we're adding it. Then at the end of the month, there were all those service fees and the internet service fee and the cash deposit fee that appeared in our bank statement, but not in the CPJ. So that means it wasn't included in that 217. So that's why we are once again adding those amounts that were not included in our CPJ. So we get to a new total of payments of 223,555. So this is what our payments should actually be, right? They also told us in the question that our receipts, our total receipts, is 225,010, but from our information we could see there were no adjustments made to our cash receipts journal. If there was, then they would have said in the question, for example, there was maybe a debtor that paid us something and an amount, and the accountant maybe incorrectly recorded that amount for the debtor, or an amount was received from the debtor in the bank statement, but it was omitted and it was not recorded by the bookkeeper or something like that. But within this question, we can see all our adjustments that were made were all to payments that we made out or that we paid out. So that is why we made adjustments to our CPJ. So there are no adjustments to our CRJ. So now the next part of the question says we need to prepare a bank account in the ledger that is properly balanced. So obviously when you're going to do your bank account in your ledger, you're going to have to start with your opening balance, which was last month's closing balance. And where do we get that amount? We get that from last month's bank reconciliation. So remember last month we reconciled from our bank statement to our bank account in our general ledger, because remember that's the point of the exercises. We are comparing what is our balance in our bank statement and we are reconciling it to our balance in our bank account. So this 24,600, which was our closing balance at the end of November, is going to be our opening balance in our bank account for December. And it told us in our question that we have an unfavorable balance. So remember, for us, an unfavorable balance means a credit balance. Why? Because we're probably in overdraft and we owe the bank money. We are using the bank's money. It's not our money. So that's why It's a credit balance. So they are essentially almost like a creditor to us. So that's why we have our opening balance on the credit side, because we are told it's an unfavorable balance. We recalculated our total payments of 223,555, which we have just done. And remember, your bank account, all payments you record on your credit side, because usually a bank account is an asset. So all income that you receive, you will record on your debit side, because when your assets increase, it increases on your debit side. And when your asset decreases, it decreases on the credit side. So total payments we record on our credit side, and all our receipts we record on the debit side. Where did we get that receipts? It was the 225,010 that we got here at the bottom. And remember, we made no adjustments to it. So it's that 225,010. And now the question is also telling us to properly balance this account. So that's what we are doing right here. So we calculate a balance carry down or carry forward of 23,145. So now we know this is the balance that we are going to work towards in our bank reconciliation. And that's the last step that we need to do now, is to prepare our bank recon. So where do we start with our bank recon? We start with our balance according to the bank statement. And where do we get that? They gave it to us in our question. And it is the unfavorable bank statement balance of 37,445. Okay, so we start with the 37,445, which is right there, unfavorable. So now remember, we're looking at it from the bank's perspective. So an unfavorable balance from the bank's perspective will be a debit balance. Why? Because we owe them the money. We are their debtor. But in our books from our side, an unfavorable balance or overdraft is a credit balance, because we owe the bank money. So they are our creditor or liability, if we can put it like that. So they tell us we have an unfavorable balance according to the bank statement. So we have a debit balance, right? They told us in our instructions, all debit balances are pluses. So there we go. There's our plus balance. Or our credits, remember they told us in our instructions, all credits will be shown with a negative. And we know all our outstanding deposits are credits on our bank recon. So the 3,000 Rand that they told us in the question, which is the outstanding deposit of 3,000 Rand, and then also the 7,500 Rand from the November recon that was not that did not clear the December bank statement will also appear on our bank recon as a credit. So therefore those two are minuses, because our instructions asked us to minus all credit amounts. And then all our outstanding payments appear on the debit side. And remember, we must have no sign in front of a debit payment, which means it must be a plus. So all our outstanding payments we've added. They also told us that there was a correction of an amount that appeared on the bank statement twice. So it appeared in the bank statement twice and in our cash book only once. So that means we need to reduce our bank statement or our bank balance, sorry. Then we had this one was the correction of the payment that did not relate to our business. So an amount was deducted off our bank statement, which did not relate to our business. So that means our account needed to be credited again. That money needed to be reimbursed or paid back to us, if I can say it like that. That's why it is a credit. That's the exact same reason why this 4,300 is a credit, because essentially an amount was deducted off our account twice. So we needed to be reimbursed or refunded with the one amount. So that is why it was credited to our account. And when we add our opening balance with all our adjustments, we arrive at the magic number of 23,145, which is our unfavorable balance in our bank account, which appears right there, which we just calculated on top there. So students, what the Excel sheet that we will share this Excel sheet with you. So I've also just put on the side the debit and credit columns for you so that you can see, because I know in your tutorial or your study units, it is depicted like this with the debit column and the credit column. But I know in your actual assessment, they ask you to use plus and minus signs for debits and credits. So I just wanted to put both here for you so that you can see the difference between the two. But I hope that helps, and I hope that clears any confusion you may have had about the bank recon, and that it just makes it a bit easier. And I wish you all the best with your exams. Thank you, Tejo.
Thank you so much, Tracy. I see the students are saying that we demonstrated the CPJ, but we didn't really get into the CRJ, and that errors in the CPJ are corrected in the CRJ. So just to clear that confusion, you are correct to say when there's an error in the CPJ, it will affect the CRJ because they mirror each other. Money from the other will affect money into the other. And then the other question is, what does the amount in brackets mean? Tracy, I think you can take that one. I'm assuming the student is referring to the bank reconciliation that you were busy with.
Oh, yes. The brackets just means a minus. So remember in our instructions, we were, let's just quickly go there again. So a minus means a credit. So remember here in our instructions, they told us an entry in the credit column of the bank reconciliation must be indicated by a negative sign in front of the amount. So when something is a credit in your bank recon, it's reflected by a minus. So that's what the brackets mean.
Okay.
It means
Thank
a minus.
you so much. Is it possible to show the CRJ side? Because I see there's another student that says, yes, we want to see the CRJ side of things. Because the required the CRJ and the CPJ, but I think it is there on the Excel.
Students, so remember the adjustments were made in the CPJ and not in the CRJ. So we made our adjustments, but there were no adjustments in the CRJ.
Okay, thanks for that. Excel shows when you format. Sorry, I'm trying to to read while giving you an opportunity also to chip in. Can't we record the bank fees as a single entry?
Yes, we can. It depends on also what the question looks like in your exam. I'm not sure if there'll be 3 separate lines. If there are 3 separate lines, then you obviously record them individually. If not, it can be one line for sure.
Okay, so I see there's a lot of questions on the CRJ. So what we'll do when we share the slides, we'll just slot in the solution for the portion of the CPJ as well as the portion of the CRJ, so that students can see how the amounts are reflected on both those journals. And then when we're adding the difference, I'm not sure, Amanda, which difference you're talking about. Are we not supposed to record on CRJ because we're receiving the money not paid? Okay, for today, I think we wanted to demonstrate the CPJ, but I see a lot of students are asking for the CRJ as well. So when we do share the slides, we'll just indicate the impact that some of the line items had on the CRJ, if that is okay.
That's perfect, Tigo.
Yes, and one student is saying that the confusion is that I thought that the 450, if you deduct in the CPJ, you're supposed to add in the CRJ. That is correct. Hence, I'm saying the CPJ almost sort of mirrors the CRJ, right? Because it's cash receipts and it's cash paid. So if there is a mistake in your cash payments, they will affect your cash receipts journal. If there's a mistake in your cash receipts, they will affect the cash payment. So you should always just keep that in mind as a student. Okay. Okay, so we'll upload. I see somebody says, please do it, so we'll upload. For now, I'm just gonna afford a few people the opportunity to ask questions. I see there's a few questions. There's a few hands. It's Sandile, Rihanna, and Slungile. I'm not sure if I'll be able to unmute you, but I will allow you, Sandile, to bring your question forth. I've allowed your mic. If you can unmute yourself and ask the question.
Good evening, Tejo. Thank you for the opportunity. I'm just a bit confused on the CPJ and CRJ, because from previous classes we were told we do corrections. In the errors we correct them. If they're done in the CPJ, then we correct them in the CRJ. So I did not know that we are able to do subtractions in the CPJ. So, because at the end of the day, it will affect the final amount. So I just wanted to get a clarification on that.
Yeah. I think
Tejo,
Sandy,
I'm
okay,
actually,
you can take
sorry,
it,
Tejo.
Tracy.
I'm actually just correcting it here for the students so that they can see. You can continue so long. So let me do the corrections here quickly and then we'll share that.
Okay, no, that's fine. Let's take Rihanna. Sandile, your question will be answered with the amendments that Tracy is making. Rihanna, your mic has been allowed. You can come in.
Good evening. I just wanted to find out, well, my question was similar to Sandide's question, but I also wanted to know, is it a rule that we can't use Excel during our exam, or are we allowed to?
With
Hello?
that one, yes, we can hear.
Okay.
I think I'll allow one of the lecturers maybe to assist with regards to Excel. So Excel, Rihanna, you'll be using it for calculations.
Yeah, basically like what you all are doing now in terms of the bank recon, but using Excel to do the same thing like during our examination. Obviously, like not opening other files and only using that blank sheet just to do our calculations and type and stuff like that and calculate while we are busy with the exam. So it'll make it faster as well for us to now not have to write down everything and then go back and calculate everything. That I feel takes a lot of time, but if it is allowed, that would be great. If not, then we just have to work past it.
Okay, thanks, Rihanna, for your question. I think we'll just clarify it with the lecturers, but I don't see the difference between you using Excel to calculate as well as using it using a calculator while writing it down. But we'll just clarify with the lecturers in terms of the use of Excel. I don't want to give an answer just to find out that for exam purposes, it's actually not correct.
Definitely, I understand.
Okay, thank you so much.
Okay.
I'm going to allow Slungile. Slungile, I'm going to allow your mic. Your mic has been allowed. You can unmute yourself on your side and come through with your question.
Hi, everyone. Yeah, sorry, Tracy. I just want to find out something. I'm a bit confused with regards to the bank statement because on the assessment, the amounts on the bank statement, they amounted to the 37,000. But this time, they amount to the carried amount on the bank account. So I'm a bit confused there whether it was the format that was used on the assessment or what.
Okay, thanks for that. Tracy, will you be able to tackle that question once you've amended the spreadsheet to say that is it because of the format that the amount is different? I think let me allow one more question and then I'll allow Tracy to demonstrate with the Excel as she's busy amending, just to ensure that she answers all the Team Apudi, I've allowed your mic. You can come through with your question. And then Michelle will be the last person that I'm allowing. We do need to jump into the next question that Tendo is going to take us through. And we just have an hour for it as well. So just to make sure that we cover everything, I'm going to let Team Apudi to ask the question. And then let Michelle ask the next question. And then we stop there.
Yes, thanks. I was saying perhaps it would be slightly better if you see if they send the screenshots, they would maybe if they could send how the answer sheet looks like, you see, so that perhaps when Tracy does this, she can see what the CPJ has and what the CRJ has, so that we can actually see that which amount goes where and which transaction goes where. Because you see, if we do it without maybe considering how the exam looks like, it brings us in a place where of sort of confusion. You see how Tracy did it. I understand the explanation behind it, but it brings some sort of confusion if it's not how the exam would be. So yeah, I don't know if we can make a plan of perhaps maybe going forward, just having something that's similar to the exam. After calculating, we just go back there and just populate it there. I don't know if that's possible. Thank you.
Thank you for that. I think we can maybe go back to the lecturers and go ask them. I did correct this. I'm not sure if this is more understandable now. So the two receipts or the two payments that were incorrectly done in the CPJ, that I then carried that down here to the CRJ to correct it in the CRJ. So now you can see our total receipt is 225,640 and our payment is 224,185. So still, when I put in the payments and I put in the total receipts, our bank account balance doesn't change. Our bank account balance, according to our bank GL, still remains the same at 23,145. And essentially, that is what we're working towards on our bank statement. So remember, the point of our bank reconciliation, why do we do it? We do it because there's a difference between our bank account in our general ledger and our bank account in our bank balance per the bank statement. So in our question, we were told that our balance according to our bank statement was 37,445 at the end of the month. But after we did all our payments and all our workings and we recorded our transactions in our bank account, we got to a closing balance of 23,145. So you can see there's a big difference between the 23 and the 37. So that is what we are doing in our bank recon. We're starting at the 37 and we want to work our way towards the 23. I hope that explains. and also that these corrections have now been corrected between the CPJ and the CRJ. I see a question. How did we get to 23,145? So the 23,145 is our balance in our bank account in our general ledger. So we started with our opening balance that they gave us of our bank account in our general ledger, and we got that amount on our last month's bank reconciliation. So our balance on our bank reconciliation, according to our bank account, was 24,600. So our closing balance of last month's bank account in the GL is obviously our opening balance for our current month. So that is why we use the 24,600. We then have our total payments that we get from our CPJ, right, which we have just calculated. And then we also have our total receipts from our CRJ, which we've also just calculated. And then we close off our account. And that's how we get to our balance of 23,145. Thanks, Seho.
Thank you. Thank you so much, Tracy. I think you've covered most of the questions. I think there's only one hand that is left that I'm going to allow. It's Michele Nyoni. I hope I'm not butchering your name, but I'm going to allow your mic so that you can bring forth your question. And that will be the last question that we're taking for this specific section of the lecture. Michele?
Good evening. Am I audible?
Yes, you are audible. Evening.
So I just want to ask on the double payment that we made as a company, doesn't that affect the CRJ since it's a double payment instead of one payment? So when we're correcting the error, does it affect the cash receipts journal? Oh, I'm wrong.
Thank you for your question. No, it won't affect the cash receipts journal. Let's think about this quickly. So remember, in your cash receipts journal, those are receipts that are on your bank statement that your accountant or your bookkeeper has recorded in the accounting records. But they told us that a double payment was taken off our bank statement. So we need to make that correction in our bank recon. If they had told us that this double payment was recorded twice in our CPJ, for example. So if the accountant incorrectly recorded this amount, so it went off our bank statement twice, and this person went to go incorrectly recorded twice, then yes, you are correct that it would have then been recorded in your CRJ to correct it. But they just told us in the question that it was deducted from the bank statement twice. So that just means the bank must refund us our money. We didn't record it in our books twice.
Okay, thank you. I understand.
Thanks, Seho.
All right, thank you so much. It's exactly 7 o'clock. Thank you, Tracy, for that. I think when we share the slides, we can just share the solution as well, showing the CPJ and the CRJ as promised. And then Michelle, your hand is still up. You may bring it down. I'm going to now hand over to Tendo to take us through the year-end adjustments. And then from there, we'll take the last round of questions after she's done with her presentation. Tendo, you may come in.
Thanks, Tseho. Just checking if I'm audible.
Yes, you are.
Okay, perfect. Thanks, Tracy, for taking us through the bank recon and the adjustments. I will look at year-end adjustments. So let me just share my screen with you guys. And then we'll do a quick presentation, and then we will jump in to the question that we'll be doing. Okay, so when we think of year-end adjustments, I think the best way that you can look at it is you need to consider all the content that you've covered for the year, right? Don't look at things in isolation, because everything comes together in this section, and you just have to, because now you're at the end of your financial period, you're preparing your financial statements, so you need to be able to adjust for all the various transactions that have happened throughout the year. So I'll just do a quick summary of the different types of year-end adjustments that come in, and then we'll show you how that works in practice. Okay, so the first one you have is a prepaid expense, right? Now, this refers to when you make a payment in the current period for an expense that occurs, for an expense that you will utilize in the next period. So practical example, our year end is 31 December 2025, but you are making a payment for rent, and that rent is for January. So you've paid your entire rent for the 2025 period, and then you decide to also pay your January rent, right? That is a prepaid expense. And what you need to do is you actually need to remove it from your expenses in 2025 because it relates to a future period, right? And then you need to add it as a current asset, which is a prepaid expense. And think of it in the sense of, because you haven't utilized that rent yet, you can go back to your landlord and claim that money back. So it is money that is due to you, and that is why we record it as a current asset. The next one is accrued expenses. Now, these are expenses that relate to the current period, but we haven't paid them at the end of the year, right? So sometimes these can occur in the form of, if you think of your water and electricity rates, these statements can sometimes come at a later date, right? Or the supplier just hasn't invoiced you yet, but you know that you have used up that expense within this period. So you know that you are liable for it because you've already enjoyed the benefits that come with whatever service that you have been provided. So you need to add your accrued expenses into your expenses for the period that you are considering. And then you also need to raise a liability, a current liability at the end of the year, so that you know that this is an amount that you still need to pay whenever you receive the invoice. Okay. The next one is when you have consumable inventories on hand. So your consumable inventories, you can think of it as maybe stores and material or stationery. So it's things that you use in your day-to-day business activities. Whatever you've used in the current period, you will expense it. But whatever is left at the end of the year, you can actually take that into your current asset line item or into your inventory classification, because you'll be able to still utilize it in the following accounting period. So it's just about splitting what has been used versus what are we going to use or what is still remaining, or what do we have on hand at the end of the year, and that will be classified as inventory. Okay. Then you have income received in advance. Again, this is now the inverse of prepaid expenses. Income received.
Tendo,
Yes, ma'am.
may I come in?
Yeah,
There's
sure.
comments to say, please slow down, but I understand that you're trying to run through the theory.
Okay.
Students, these are things that, at this point in time when it's exam, we assume that you already know. Hence, we are running through the theory so that we can get to the meat of the questions. But there is a request that we need to slow down. I
Okay,
think we
sure.
still have time. You may continue, Tendo. Thank
Okay, I'll try to slow down. Tshego, just come in again if my pace is still a bit fast. So income received in advance, like I was saying, is basically the opposite or the inverse of prepaid expenses, right? So this is when you have received funds, but they don't relate to the current period, they relate to the following period. So let's go back to our rent example. If you are the one that is renting out a property and your tenant pays you rent for the next 6 months, right? They are already up to date with their current rent for the year, but they also decide to pay upfront for the next 6 months. That is actually income received in advance. Okay, so you don't record that in your current year's income. You have to record that in your following year's income. So you need to reduce it from income and add it as a current liability, because you are still liable to pay them that money if they don't utilize whatever they paid you for. Okay, so that's why it's a current liability. So again, it's exactly the opposite of a prepaid expense, where that one is a current asset, this one is a current liability. Okay. The next one is accrued income. Again, the inverse of accrued expenses. This one occurs when you have earned the income in this period, but you haven't received the physical cash at the end of the year. So if going back to the rent example, right? For the December month, the person has lived here for the whole month, and at the end of the month, you know that they have to pay you that rent, but they haven't paid it yet. So now it's 31 December and you are doing your books. You don't have the physical cash, but you know that your tenant was there for the month. So you are actually eligible to receive that income. So you will record that as income in your current period, and then you are also going to raise a receivable because now they owe you that money. They have to pay it to you, right? So then you're going to go and say debit accrued income and credit your rental income or whatever account that you are receiving. Okay, I'll move on. The other one is credit losses. So credit losses occur where you have any bad debts that you need to write off. So remember, during the year, you would have sold, let's say we are selling t-shirts, you would have sold a couple of t-shirts to Tendo, and then at the end of the year, you actually find out that Tendo is now insolvent and she will not be able to pay you back that money for the t-shirts. So when you sold to me, you raised a receivable because you went and said debit trade receivables, Tendo, and credit revenue, right? But now you realize that actually you are not going to receive the physical cash because I am now insolvent, and you have to now go and write down that debt, and you do that by raising an expense. So you'll go and say debit bad debt expense and credit the receivable because you won't get that money again. Another instance of this one is when you receive the money in part. So maybe I owed you 10,000, but now I come to say, listen, I can only give you 5,000. The other 5,000 I won't be able to give to you, right? So you'll go and write off as a bad debt the 5,000 that I can't pay, and then the one that I do pay to you, you will then reduce your receivable. Okay, so those are the two instances that can happen with credit losses, right? The other one is depreciation, right? I know you guys had a revision class on depreciation as well. This is just normal depreciation. The only way that it comes up as a year-end adjustment could be maybe they have not yet recorded the depreciation expense for the year, and then you just have to go in and do the calculation for the depreciation, or they've calculated it incorrectly, and then you just have to go and correct it, right? So there could be a couple of scenarios, but depreciation is the normal depreciation expense that comes up within PPE, and you just have to now go and record it within your financial statements. Okay. Then you can also have allowance for settlement discounts. This is if you have granted a discount to a debtor, right? Or it could also come in the form where you have been granted a settlement discount for your suppliers. Okay, so you just have to know where are we adjusting and which amounts, and I think this comes up in our example, so I'll show you how this works in theory. Okay, so those are just the different types of adjustments that we have. I'll go straight to the question. The thought process that I like to follow when I look at adjustments is the first question that I ask myself is, what is the correct accounting treatment? Okay, how is this thing meant to be treated? If you understand that, you then look at the question and say, all right, how has it been treated? What have they done to date? After that, you then determine, okay, what do I need to do now at year end? Do I need to adjust anything? Do I need to top up anything? Do I need to go and reduce certain amounts in certain accounts? And that is the best way to think about your adjustments. Okay, so the example that we are looking at comes from study unit 5, which is your financial statements, right? But this question is question 2, but it has nice adjustments that flow through it. So I think it'll be a good one to look at. Okay, so you'll see that they actually give us a pre-adjustment trial balance. Okay, so when they tell you that they've given you a pre-adjustment trial balance, that should actually turn on sirens in your head to say that, okay, there will be adjustments that you need to make because this is your financials as they stand. They haven't taken into account certain information that they will give you, and you will then have to go consider that and make adjustments to these numbers. So these are not final signed off numbers. These are numbers that still need to be adjusted. Okay, so I like going through the numbers, just going through the different categories that they've given us. Just squeeze through it when you get your question, see what you're working with, what have they given you before you go into your questions. Okay, so firstly they give you additional information. We'll go through these one by one, but let's just look at the required. They ask us to prepare the statement of profit or loss and other comprehensive income of mill traders for the year ended 30 December. Okay, and this is the required that we will be looking at, because this is the statement where we will make all our other adjustments. All right. So if we go up here, because they've asked us to do a statement of profit or loss, we need to consider the structure of our statement, right? And that will give you a flow as to what adjustments you need to consider first, and then which ones can you come back to later. All right. So if we just read additional information before we come up here, they tell us that this must still be taken into account. So that's another trigger for you, or a reminder for you to say, this has not been done yet. Okay, so the accountant hasn't done this yet. You still need to go in and adjust for all of these transactions that come below. Okay, so we have transaction related to inventory. They tell us that on 1 July 2025, we had a balance of this much, right? Sorry, if I can just go up. They tell us that our year end is 30 June 2005, 2025, right? That means that your year starts on 1 July 20.4, and then it ends on 30 June 20.5. So that 12-month period, you want to make sure that any transaction that has happened within this 12-month period has been accounted for. Anything that falls outside of this 12-month period, you need to question, is it correct for it to be sitting within our books? Because you want to make sure that your books are correctly reflecting your position, your financial position, as at 30 June 20.5. Okay. So they give us the balance as at 1 July 20.5, which basically means that this is your closing balance on 30 June 20.5. Okay, so that's how you can take that, and it will be an opening balance in the next financial period. They also go in and say rental income for the year should have been 6,000. When I read that, the question that I ask myself is, how much have we recorded now? Because it means that this is the correct amount that you want to see reflected in your books. So whatever is currently recorded, you want to go and either chop it up to make it 6,000 or reduce it to make it 6,000. Okay. The next one is they give us packaging material on hand at 30 June, which amounts to this. So we know that this is a closing balance at the end of the year. So we know already that this actually has to be sitting within our inventory line item. So we're going to have to do some sort of reduction in a stationery account or a packaging material account. And this will go into our current assets sitting under the inventory line item. Okay. Then they tell us that commission income of 3,600 is still outstanding. That means that we actually have accrued income when it comes to this. So we need to probably go into our commission income and top it up with the 3,600. We have water and electricity that is still due. That means that we have an accrued expense. We've already used the water and electricity for the year, but we haven't been invoiced for it or we haven't paid for it. But we know that this actually needs to reflect in our expenses for the current period. Okay. Then they tell us that we have a mortgage from XYZ Bank. And it bears interest at a rate of 11.5% per annum, which is compounded annually, and interest for the year must still be provided for. This tells us that there hasn't been any calculation done for interest expense, so we still need to do the calculation for interest expense and include that as part of our statement of profit or loss. Right. Then they tell us that the loan from African Bank is unsecured and bears interest at 19.5% per annum, compounded annually. Interest for the year must still be provided for. Similar to this one, we have to go and do the calculations for the interest and account for it because it clearly hasn't been included yet. Then they tell us that a debtor who owes the business 4,640 was declared insolvent and the account must be written off as irrecoverable. So it means that we will not be able to recover this 4,600. And so we have to go and raise a bad debt. And then from a balance sheet perspective, we will go and reduce our trade receivables by this 4,600. Okay. Then they say insurance amount includes the premiums for the months of July and August 20.5. So we see clearly here that our period ends on 30 June 20.5. That means that we have now paid upfront for 2 more months that fall within the next period. All right, so we will go through how to calculate that one. So if we look at our statement of profit or loss, the first thing that we normally consider is this thing showing properly. Seems like it has cut some information here. My side. Okay, there we go. It's back now. Okay, so if you cast your eyes on this line item here, this is our sales amount of 272,195. So that is what we will start with. We've already read through our adjustments and we've noted that there's no specific adjustment that relates to revenue or sales, but let's...
Hello.
Yes.
Apologies for that. I believe your pace is okay because you also read and explain what the sentence means, but the students are saying let's slow down a bit.
Slow down again. Okay.
Slow down
Okay.
again, yeah.
Okay, I'll slow down
But I believe
as we go through. It helps.
it's good. But yeah, the students believe that we need to just read the sentence slowly and then explain it slowly as well.
Okay.
But so far, I think we've caught all the adjustments that needs to be done and so forth. So you can continue. Thank you.
Okay, just
Yeah,
remember,
there's
guys,
one
I was
student.
just...
There's one student who's saying you are perfect though, and there's another one who has a heart. So I think maybe it's dependent on the level of concentration. There's another one who says we like that pace because you read and then you explain what the sentence is saying. But let's yeah. There's another one who says they agree with the pace, that it's perfect. So yeah, I don't know how to make everyone happy.
Okay,
and
let's try
one
it
is saying
again.
you're explaining so well. So yeah, let's maybe slow down a bit and
Okay,
then we
sure.
take it from there.
Okay, cool. I'll try to slow down. Sorry, guys. I just wanted to say, remember we were just going through the adjustments or the additional information just so we are aware of what is going to come up when we go through our numbers, right? But we're still going to go through them again as we do the adjustments themselves. So we're not done going through what is in the additional information. All right. So sales, they've given us a number here of 272,195, right? If you were reading with me, you'll remember that they didn't mention anything in additional information about revenue. Okay. But the trick here is you still need to go and just look again on every description and just make sure that there's nothing that could affect your sales number, because that is what will drive whether you have an adjustment or not. So if we just scroll down, if you're just reading, right, you'll see here that we have a sales return, okay, of 1,860. Okay, and then we also have a settlement discount granted of 465. So if you think about it, we have made sales of 272,195. But of those sales, there's actually been sales returns of 1,860. That means that you need to go and reduce this number by the 1,860. And then we also have settlement discounts that have been granted of 465, which means we also need to reduce our sales value by the 465 Rand worth of discounts that we have gone and given our customer. Okay, again, they've told you that this is a pre-adjustment trial balance, so you cannot, by them saying that, they are telling you that all of these amounts that are sitting here have not been accounted for, or that those adjustments have not been included. Okay, if these adjustments have already been included, they'll tell you that all these numbers are correct except for the following, and then they'll give you what you still need to go and adjust for. But because they've specifically said that it's a pre-adjustment trial balance, we know that everything here still needs to be accounted for. So what we'll go and do is we'll come to our sales line item, and we'll show that, okay, we have sales of 272,195. We've had sales return of 1,860, so we need to subtract them. And we also have a settlement discount that has been granted to our customer, and we have to go and reduce by that number. And then you will land up with a sales value of 269,870. Okay. So that's sales done. If you even have a checklist for yourself somewhere, you mark it off and say, I'm done with revenue, I can move on. Okay. Now, again, we are being driven by the structure of our income statement. So already in our minds, we know we do sales, cost of sales, and then we have gross profit. So let's move on to our cost of sales. Okay. So if we just scroll down here, I'm looking, I don't see cost of sales. So they haven't given us a value for cost of sales. What that tells me is that I need to go in and calculate cost of sales. What have they given me though? They've given me inventory. And I know that cost of sales is driven by inventory. So if you just think of cost of sales as a concept itself is, I go and I buy inventory and I sell it. So I'll go to my supplier, I'll buy 10 t-shirts, and then I'll sell those 10 t-shirts with a markup of however much I want to make. So maybe I've bought them for 100 Rand, I'll go and I'll sell them for 200 Rand, right? If at the end of the year, I have one t-shirt that is still not sold, right? Do you guys agree with me that I can actually sell this t-shirt in the next period as well? Okay, so what is the factor of cost of sales? It's anything that I have brought into the current period. So that is my opening balance of inventory. It's anything that I have purchased in the current period, right? And then it's also what is remaining at year end. Those are the three things that I need to consider. All of those will determine what I have sold in the current year, because that's what I'm trying to calculate is, well, all I have now is just the stock that I have on hand and the stock that I've purchased. Using that, I need to be able to calculate how much have I sold at during the year. Okay, so they've given us inventory, the opening balance of inventory, which is sitting at 28,300. Okay, happy with that. If we remember, information number one told us that on 1 July, our inventory had a balance of 22,750. So that is our closing balance. So we have closing balance, we have opening balance. Now we need to know, what did we purchase in the middle of the year? We know that additional information didn't mention anything regarding any purchases. Okay, so it means that it has to be sitting somewhere here. If we scroll and we scroll, we will see, okay, there's something regarding carriage on purchases. Then we have import duty on purchases, and then we have insurance on purchases. Okay, sharp. We go again. We have a purchases number here of 190,800. We also have purchase returns of 245. Okay, is there anything else? No, there isn't anything else. Okay, great. So we know that our method is, we are going to take our opening balance of 28,300. Okay, that is your starting point. Then you are going to add any purchases you have made in the current period. But do you guys agree with me that when you take that, you need to consider any purchase returns and any settlement discounts that we have received from our suppliers when we were making those purchases? Okay, so we will take the 190,800, right? We are going to add, we are going to subtract rather our purchases returns, right? Because these are things that we have taken back to the supplier. And we are also going to consider the settlement discount that we've received from the supplier. Okay, so we'll come here and we'll say, right, we have inventory at the beginning of the year of 28,300, right? Then we've went and made purchases of 190,800. These are our purchase returns, and this is the settlement discount that we have been granted by the supplier. Okay, happy with that. Now we have our purchases. But then what do we do with these three amounts here? So import duty, right? If you think of it, if you have imported, okay, let's make a practical example. When you buy your goods from Shein, right? You'll get a message from Buffalo Logistics and they will say you need to pay me 800 Rand, because now it's very expensive. So now they'll say you need to pay us 800 Rand for us to release your package. Okay. If you don't pay that money, your package will not come to you. So as a business, if you don't pay your import duty, right, or your carriage on your purchases, you will not be able to receive those things that you are purchasing from wherever they are coming from. So this is actually a cost that is necessary to bring your inventory to your place of work or to the place where you will be able to sell it. If you don't receive the inventory, you won't be able to sell it, and now you have no inventory at all. Okay, so based on that, we are actually allowed to capitalize our carriage on purchases and our import duty on purchases to the cost of our inventory. What does that mean? It means that this forms part of our purchases in a sense. Okay, so in another world, the 750 and the 782 would actually be added onto your purchase number, and we would say, because if we don't pay it, then we don't have a purchase. We're not going to receive whatever we've purchased. So it's a necessary cost. If you think of insurance on purchases, is it necessary? Right? Yes, to protect yourself as a business, but you would still be able to receive your goods without the insurance. And so this one, you actually have to expense it. You can't capitalize it as part of your purchases. Okay, so what we go and do is we go and we add our carriage on purchases and we add our import duties, because in my mind, those form part of the purchases that I am making. Okay, and then we add all of those to our opening balance, right? Then they have also given us the balance as at 30 June 2025, or in this case, they say 1 July, right? But if it's your following year's opening balance, it means that it's your current period's closing balance. So this year is our closing balance. And so you will go in and say, let us reduce our calculation by that closing balance, because we still have those goods on hand, which means that we actually haven't sold them. Okay, so you say opening balance plus purchases less your closing balance, and that's what will give you your cost of sales for the current period. Okay, I'll repeat that again. It's your opening inventory. It's any purchases that you've made, right? So if you've had like transport on purchases or carriage on purchases, you will add that as well as part of your purchases, and then you will reduce it by your closing balance of inventory, or the inventory that you have on hand at the end of the year. And that smoliki calculation there is what you need to do to get your cost of sales number. Okay, so if we just add everything below, we come to cost of sales of 197,412. Then if we just take our sales minus our cost of sales, we come to a gross profit number of 72,458. Okay, so we're happy with sales, we are happy with cost of sales. Now we need to think of other income, right? Because that's the next part that comes in our statement of profit or loss. Okay, if we just go to, okay, we see here they say something about rental income of 6,500. Okay, great. Then we have commission income of 18,000. I remember seeing something about this in the additional information. So let's just go and remind ourselves what they've said. In point number 2, they say that rental income for the year should have been 6,000. Okay, what do we have? We actually have 6,500, which means that I actually have prepaid income that I have received in the current period. So someone has paid me extra on their rent by 500 Rand, but I know that it doesn't relate to the current period, because additional info says for this year we only should have had 6,000. So my adjustment is I'm going to take the 6,500 and reduce it by 500, because I only want to see 6,000. Okay, and if we go here, this is what we'll see here is we only want to see 6,000 Rand coming in. So we'll remove the 500. And then if you are also asked to do a statement of financial position, your impact on that will be you actually have a current liability of 500 Rand that you owe to your tenant. Okay. Then the other line item in our other income, we said we spoke about commission income, right? Which is 18,000. If we go to additional info, they said commission income of 3,600 is still outstanding, right? Which means that we have actually, that is accrued income, okay? Because we have earned it in the current period, but we just maybe haven't received the funds that are related to it. So I want to go and top up this 18,000 with the 3,600 that they said is still outstanding, so that I correctly reflect the income that I have earned. So we will go to commission income and say, right, we are doing 18,000 plus the 3,600, and then we are left with commission income of 21,600 at the end of the year. Okay, do we have anything else that is related to other income? Rental, commission, there's nothing else that I see. I'm happy that I have accounted for all my other income, right? Then I go to my expenses. Again, I just like to go through it the way that they have presented it here, and then we will go that way. So the first one that I would think of is, there's this insurance on purchases that I wasn't allowed to include as part of my purchases. So I will go ahead and just expense this already, right? So I am going to include it there as part of my insurance on purchases. Okay. Then if I scroll down, we have depreciation of 19,100. They did not mention any adjustments here that are related to depreciation. So I will go and add this as it is. Okay, depreciation is a nice one that they like to test as well, where they actually give you some entries that you still need to go and update. So maybe they'll say there was actually a sale of a vehicle that took place at the end of the year, and the depreciation related to that vehicle was not accounted for. And so you'll just go and take whatever they've given you and add whatever additional depreciation that you have to account for. But in this example, you are going to take it as it is, which is the 19,100 depreciation, which is over here. and then we are just going to highlight it because we are happy with that number, right? Then insurance is sitting at 8575. Did they mention insurance? They did. They said that insurance includes premiums for July and August. Okay. So they've given us 8,575. So what this means is that this 8,575 is actually for 14 months, not 12 months. We want to see numbers that are only related to 12 months and not 14 months. Okay, so the best way for you to get it is I would go and I would say, okay, what is 8,507 divided by 14? Okay, again, the 14 is they said you have paid extra for the month of July and August. So you have your 12 months from 1 July 2024 to 30 June 2025. Then you add July and August, and that's how we have 14 months. So you'll take whatever they've given you, divided by 14 months. This tells me that the rent per month is 612.5. So now I want to do a calc to say, okay, how much is the rent for 2 months then that they have paid me extra by? And that is 1,225. So I want to go and reduce my insurance with 1,225 because this should not be in the current period. This is actually a prepaid expense. Okay, so that's how you think of that one, right? So we will go into our statement of profit or loss. We are going to look at insurance, which is over here, and we will just say, all right, we want, hold on. This calc is doing something funny. Is it? So if we say 8575 minus 1225, okay, it's not. All right, I just showed it differently here because then I just said I just want the 12 months rent, and that is what that calculation did. But the easier way to do it is find out how much is your rent per month. Okay, how much extra do I have? It's 1225. Then you're just going to go and show your calculation to say, well, you've taken 8,575 minus the 1225, and that is how you got your 7,350. Okay, so we are now happy that we have adjusted our insurance correctly, and we are only reflecting 12 months worth of insurance and not 14 months worth of insurance. Cool, happy days, right? Then we move on. Sorry. We have done insurance. Now we have packaging materials of 4,600. And we go to additional info number 3. They've said that packaging material on hand amounted to 1,200. That means that at the end of the year, we still have 1,200 Rand worth of packaging material that actually can't be shown as an expense. Why? We have not used it yet in the current period. So what we'll go and do is we'll take our 4,600 and reduce it by this 1,200. And we want to show this 1,200 as part of inventory. Okay, so for purposes of your income statement, you will come here and just say 4,600 minus the 1,200, and that is how you come to packaging materials of 3.4, which is what you have utilized in the current period, right? Happy days. We've already looked at our purchases. We've dealt with purchase returns. We've dealt with rental income. You are ticking off as you go, just so that you don't give yourself anxiety to say, yo, have I looked at this? Tick as you go, and you know that you are done with that. Okay. We've dealt with sales return, tick. We've dealt with settlement discount granted, settlement discount received. Then we have telephone expenses of 2,420. They did not mention anything about telephone expenses, so I'm happy that I can just record this amount as it is, which is 2,420. Telephone expenses right here at the top. So I will record that as it is, no adjustments required. Then I have carriage on sales, which is 1,250. That is an expense that I will bear myself, right? Which is 1,250. So I will record it there. Okay, we have repairs of 2,160. They don't mention any adjustments required on repairs, so we assume that that number is correct. So we'll come here, we have repairs, tick that off, we are happy with that number. Okay, then we have fuel of 3,479. Again, nothing mentioned here about fuel, so we are happy that our fuel number 3,479 is the correct number that we need to account for. Happy days. Then we go to fuel wages. Wages is 64115. They don't mention anything about any adjustments to wages, so we will go ahead and record our wages number as it appears. Okay, then water and electricity, they did mention something about this. So we go down and we remember, they say that water and electricity of 500 is still due. That means that you have used up the water and electricity in the month, but you either haven't been billed by the municipality or you haven't made the payment yet, right? But because you've already enjoyed the benefits that come with it, it means that you actually have to go and expense it. So you will say 5,100 plus your 500, that should be your water and electricity for the year. So you'll go and say 5,100 plus 500, and that gives me 5.6, and that is my adjustment. Okay. We've dealt with everything that is here, but remember they mentioned something about a debtor. So we come to point 8 and they mention again that a debtor who owes the business 6,000, 4,640 was declared insolvent and the account must be written off as irrecoverable. So the full 4,640 is irrecoverable. So we need to scrap this debtor. So we'll actually go and say debit bad debt expense and credit the receivable, so credit tender, because you can't pay us anymore. So you are going to now add this line item because it is a valid expense in the current period, and you are going to show it here as part of your expenses. Okay, we come back here again, do a last check, make sure that you've covered everything. If you are ticking as you go, you'll be comfortable that you've dealt with every single thing that is here, and you've also added an additional line item which wasn't considered, and you are now happy that you have accounted for everything. Okay, then we will add up our expenses, and we know that, okay, our operating expenses for the period actually come up to 113,843, which is just the sum of all our expenses for the period. Now, if we come to our interest, right, they tell us that we have an interest that bears interest at this rate, and we must still account for it. So the nice thing about this question is the loan was already received last year, so we don't have to make any time adjustments. So you'll just go here and you'll take your mortgage as it is, which is the 105, and then you'll just multiply it by your rate of 11.5 per annum because it's compounded annually. So you just take it as it is, so it's 105,000 times 11.5%, and that's how you get your interest on your mortgage of 12,000. In other instances, what they can do is actually say you've only had this loan from the middle of the year. So you'll go and make a time adjustment where you'll go and say, okay, what is my mortgage amount? What is my rate? Or what is my percentage? And then you'll multiply that by the period that you have held that loan. So similar to how you do adjustments for depreciation, if you didn't have something for the whole year, that is something that can also come up in adjustments. Okay. Then the other one is this loan here from African Bank, which is unsecured and has interest of 19.5. So you just go here and say, what is the value of that loan? And we see here that it is actually 15,000. So we will take our 15,000 and we'll multiply it by the rate of 19.5. And that will give us our interest on loan for this African Bank, which is just 15,000 times 19.5. And that gives us 2,925. And those are our finance expenses for the year. Okay, so we are comfortable that we've dealt with everything in additional information, and we've also dealt with everything that has been given in our pre-adjustment trial balance as it relates to our income statement. And so you just go and you complete your income statement, and that is all your adjustments that you would have posted for the current period. Okay, so that's that. Tsecho, over to you.
Thank you so much, Tendo. Somebody says they need your brain and your pace for the next week. Someone says that you would rattle through the exam in 30 minutes.
I wish,
But I
guys.
think we get I think we get the gist of the question, and thank you so much, Tendo, for taking us through that question.
Sure.
We do have a few hands up, which I'm gonna afford the opportunity. D Ready, your hand has been up for quite some time, but I do not want to obviously disturb the flow of the question. So I'm going to allow you, D Ready, to come through. Your mic is on. You may unmute yourself.
Good afternoon. I just wanted to find out the cost of sale. When the tariff price be added there as well as the import duty.
Sorry, I didn't hear
Sure.
that.
Yeah, I'm also struggling to hear it. D Ready, are you able to type your question because your mic is not so clear. Unless you can repeat and we try and hear you. Okay, now we can't hear you at all. So I think rather type the question and then we will answer it on the chat. Yeah, no, your mic is bad. So I'm going to mute you and then you can type your question. I'm going to move on to Michelle Nyoni. Michelle Nyoni, I am allowing your mic. Your mic has been allowed. You can come in.
Good evening again. This is directed to Tendo. Just want to say thank you for the great presentation. Instead of us bombarding you with questions, I think you also deserve appreciation with its due. You explained everything so well, and I think I don't have a problem at this moment. So thank you very much. That's all.
Thank you.
Thank you for that. I'm going to move on to the next one. Dear Ready, please ask your question on the chats because you are not audible at all. I'm going to move to Nompumelelo Mtetwa. I have allowed your mic, Nompumelelo.
Evening, everyone. Thank you so much for allowing me. I just want to ask with regards to note 6 and 7, that mortgage loan and the loan from the bank.
Mhm.
So this interest that is calculated, is it not included in the loan? Do you have to calculate it separately and add that interest to the expenses?
Yes, you have to calculate it separately because they've already told us that it hasn't been accounted for. So if they say that it hasn't been accounted for, so you'll just take whatever loan value you have and you'll calculate your interest on that, because it means if it hasn't been accounted for, it means it has not yet been capitalized to the cost of the loan. So only now when
Okay.
you recognize it, you'll go and say debit interest expense, credit loan.
Mhm. Okay, so when you credit loan, do you say loan minus that expense?
No. Remember, when you calculate your interest in this period, right? You'll
Mhm.
say debit expense, whatever you've calculated, credit loan with the interest. Because remember, your
Okay.
interest actually adds on to the value of your loan, and then your
Yeah.
loan will be reduced by whatever payments you make towards it. So
Mhm.
interest adds on to your loan balance. It doesn't decrease it.
Okay, so my second question is with regards to the cost of sales now. So can you please remind me, I know we have a periodic and the perpetual. So this one that includes purchases, is it a periodic one or a perpetual one?
Periodic.
Periodic.
Yeah.
Okay. Thank you. I think I'm done with my questions.
Oh, thank you.
Okay, thank you so much. I am now going to allow T. Kumalo. T. Kumalo, I'm allowing your mic. D. Ready, please type your question. We cannot hear you. T. Kumalo, you may go
Sorry.
ahead.
Good evening, and thank you for the lesson. My question is the insurance part. I don't understand why we are excluding insurance from the cost of the purchase, because according to the notes, how I read the notes, we added because it's part of a cost that is needed for us to get the purchase on the condition that we are purchasing the good in.
I think with the insurance, I think when we would add the insurance, it's when the cost of that insurance is necessary to bring the inventory to its what we call it location and condition that we need to sell it. So there are instances when we capitalize the cost of inventory, right? But if it is not necessary to, like if it's just an additional security that you're placing for yourself, but you don't need insurance, then you can't capitalize it. In this case, they didn't specify, right? So, I mean, you can capitalize it. I think that could also be correct because they don't say whether, is this insurance that we have undertaken for ourselves or, what type of insurance it is. But I guess
Yes.
if you think about it, if we need the insurance to bring it to its current condition and location, then yes, we can add it. So perhaps we should add that insurance. Maybe I do agree with you.
Okay, thank you so much.
Okay.
Okay, thanks for that, Tendo. I'm going to allow T Kumalo to come in. She's the last hand that we have. I think your mic is allowed, T Kumalo. You may come in, and then I'll allow D Ready the last chance to see if we can hear her. But if we can't, then we'll read out her question on the chats. T Kumalo, you may come in.
No, I just spoke now. Just forgot to lower my hand. Thank you.
Okay, thanks for that. D Ready, you may try again.
Can you hear me now?
Yes, we can. It sounds better.
All right. So what I was asking is for the cost of sales, do you not add your carriage on costs as well as the import duties?
We do add it. We did add that.
All right.
Okay.
Okay, thanks for that, Tendo. I think there's a question, how do we record custom on duties and carriage on sales?
Custom on duties, if it's for items that you have purchased, you can capitalize that to the cost of your inventory. So you'll add that when you do your cost of sales purchases. The carriage on sales, you just record it as a normal expense because that's an expense that you incur as a business. So it could be that maybe it's a delivery that you are making for the items that you're selling or something of that nature.
Okay, and then the other question, with the loans and mortgage, should it have said that the interest is compounded quarterly? Would we divide the interest by 4?
Correct. So that, I mean, if you think about it, at the end, your closing position would still be the same. It just means that it happens in quarterly tranches.
All right, thanks for that. And then the next one, do we record interest income under finances at the bottom or under other income? I think it's at the bottom, but you may take
at the bottom, yeah, it's at the bottom. So your finance costs come all at the bottom,
yes,
including finance income.
Yeah, at the bottom, yes. Okay, I see already your hand is still up, but I believe we've answered your questions. This is actually the first class that I close off so early. Usually they run over till around 8:30, 9, 10 sometimes. But thank you so much. I see we've got 2 more hands. I'm going to allow hands up until 8 o'clock because that is what we have committed to as your e-tutors. So Rihanna, I am going to allow your mic. It's allowed. You may come in. And then after that, I'm going to allow Sokwanda, who will come in after that.
Hi, ma'am. I just wanted to find out, not tomorrow's class, sorry, the last revision class that we have. We won't be having any other classes after. Hello?
Yes, I can hear you. I think the last one is tomorrow, but if there is a request for more, I think the lecturers are open to having more revision lecturers. So just maybe email your lecturers if there's a need for more, and email them with the topics that you feel you need more lectures on, and then we'll take it from there. But yeah, as it stands, then the one for tomorrow is the last one.
Okay, and another question. Sorry, I know that you guys have to go also. I just wanted to find out, will we be doing revision on the membership fees?
I think the revision classes were based on the number of responses that were received from the lecturers in terms of the struggles that the students are having, right? So if there's a lot of struggles on a specific topic, then that is where we directed our efforts on. So if the membership fees have a lot of people asking about it, then there would be a lecture on it. But at this point in time, I cannot confirm nor deny whether there will be a class on membership fees. Tendo, your screen is still showing.
Okay, thank you, ma'am. Thank you for your time.
Rihanna?
Yes.
Sorry, I'm showing my screen because someone in the comments asked me to just display it while you're going through the questions. So I just opened it for that.
Oh, okay. Okay, no, that's fine. Rihanna, you may come in.
Ma'am, that was just me that you were speaking to. I'm done. Sorry, I'll drop my hand now.
I'm so sorry. There's so many names. So the one that has the hand up, that's the one that I call. So at
Okay.
number 1 now is Zokwanda. You may come in.
Good evening.
Yes,
Hello.
Zokwanda, we can hear
Oh,
you now. We can hear you.
okay. So for me, I have a question, but it's not for this lesson. It's for realization account.
You may go ahead and we can see if any of our e-tutors can answer, because I think each question is very unique, right? And with each question in accounting, sometimes there's like a sentence that can just overturn the blanket approach, right? So you may ask your question and I'll ask some of our tutors if they're able to answer it. You can go ahead.
Okay, with realization account, I just want an explanation because I was going through Google trying to find trying to understand the account realization account. Like I can't understand. Okay, I understand that we record the cost price of the machine that is being sold, but I don't know the actual I don't know the account. Like I need an explanation of account realization.
I feel like your question is so broad because it's not specific to like a certain it's quite broad. We use the realization account to basically show that this is the asset that we have. We've currently sold it, right? So you
Yes.
have to include in there the cost of your asset, the accumulated depreciation that's linked to the asset, right? The main key when it comes to your realization account is, have you actually made a profit or a loss on the sale of that machine? And so you
Yeah.
have to consider, if my carrying amount is 100,000, and
Yes.
I've sold it for 150, that means I've made a profit on my disposal.
Okay.
Whereas if my cost or my carrying amount is 100, but I've sold it for 80, I've made a loss of 20. And so your realization account is basically trying to paint that picture of what was the asset worth, what was the depreciation that was linked to the account, how much did we sell it for, and what was the profit that we made on that account or on that sale or disposal.
Okay. Okay, thank you.
Okay.
Thank you so much, Tendo, for
Thank you.
that. Like I said, each question in accounting students is very different. And sometimes there's a sentence that discounts the blanket approach. So there's always a blanket approach, but there's a sentence in a question sometimes that just discounts that blanket approach. So when you do ask a question, let's keep that in mind, that what Tendo has said is obviously a blanket approach to say that in that realization account, your main purpose is to find the profit or loss on disposals. Busiso, you may come in. I'm going to allow your mic.
Good evening, ma'am.
Good evening.
Yes, ma'am. I wanted to know regarding inventory valuation when we do the physical inventory count. So if maybe there's an instance where we find that there's a damage to the stock, maybe before or after they did physical count at the end of the financial year. So are we reducing the damage from the opening inventory or on the closing inventory?
So you'll
Okay.
remove
So
it
I
from,
think
sorry,
from
Tseho, you can
closing,
go.
sorry.
Yeah. No, you can go.
You remove it from the closing inventory because the stock count is usually performed at the end of the year. right? So each year, at the end of the year, you perform a stock count. So it will be a reduction from your closing inventory, not necessarily from the opening inventory.
Okay. So let's say maybe I get a question and then they say we couldn't count the closing inventory due to damage in the stock. So is it necessarily on the opening or is it on the end?
So there will be a prior period error, right?
Oh,
Because
okay.
firstly, your closing inventory is wrong, which
All right.
affects your opening inventory in the current year. So it would be a prior period error where you would need to adjust both the closing inventory of the prior year and the opening inventory of this year.
Okay. Thank you.
Right. Thank you so much. Okay, we've got 3 minutes and I don't see any other hands. In the absence of any other hands, I would like to thank everyone. Tendo, thank you so much. Tracy, thank you so much. Welcome. Thank you so much for the class. And then there's someone who says it would be better if we could have access to previous exam questions. I think practice makes perfect. I will allow the last 2 hands. I think you are the one who was asking now, unless you've raised your hand again.
But
Yeah,
ma'am,
no,
the last one, it's based on the, like, for example, if you are not given the cost of sales at the end of the year, but then we are given the gross profit percentage. So let's say maybe it's 20% gross profit on sales. So are we, before we can do the cost of sales, should we take the gross profit on sales first, or should we do the cost of sales and then do the gross profit later?
Yeah, I'm gonna rely on my other tutors right now because, like I said, each question is unique, and when they give you the revenue, cost of sales, and GP, it all depends on the merits of the question and what they ask, right? So I wouldn't want to give you a blanket answer. But Tendo, if you may come in, maybe if you understand the question and can provide some guidance, you can come in. But I'm very cautious in providing a blanket approach answer when it comes to this type of questions. Tendo?
So there's a formula that you can use to calculate your cost of sales if you've been given your gross profit percentage, right? So the first step is you calculate your actual gross profit. So you'll say your gross profit over your sales, right, times whatever percentage that they've given you. Or rather, your formula for gross profit percentage is gross profit over sales, and that's how you get the percentage. So you'll work that backwards to get your gross profit value. Once you have your gross profit value, you can actually then take gross profit minus sales, and that is what will sales minus gross profit, that will give you cost of sales. But again, it's very specific. So that's just like very high level how you can do the calc, but it depends on the question as well, like Tseho said.
Okay, thank you. I think I did a similar question there based on the gross profit percentage, and then they needed us to calculate the closing inventory at the end of the year, but with some inventory that has been damaged before they could do the physical count at the end of the year. So the reason I'm asking this question is because I got some question that is related based on that part in terms of inventory systems. So, but based on how you are explaining it now, I get to understand it. You are saying that I first determine the gross profit percentage that they stated on sales. Is gross profit divided by sales, and then I multiply by 100 to get the gross profit amount. And then from there, I take the difference between
that and your
the
sales, and that's your cost of sales. Yeah.
Okay. Thank you.
Sure, you're welcome.
And like I said, I'm very reluctant because they can say gross profit on revenue or gross profit on cost of sales. So just read the question
Mm.
in its totality to understand which formula you need to put forth.
Okay.
Right. Okay,
Thank you.
Mr. Thank you so much. The last one that I'm going to take is T. Mapudi. T. Mapudi, you may come in.
Yeah,
Your mic is enabled.
thank you very much. I would just like to say thank you very much. I don't have a question, but it's just to appreciate and to extend a thank you to Pomolo, Tendo, Tracy, Tejo, and welcome. You guys are wonderful. We see your efforts and we thank you very much. Have a good evening.
Thank you. You too.
Thank you so much. Thank you so
Thanks,
much.
guys.
Yeah, no, thank you so much, colleagues. I think there's also just from Mateling saying thank you, Tracy and Tendo. I think that's important, you know, a sense of gratitude to keep us going. Because sometimes if this gratitude is not provided, we end up feeling like we're not doing enough. And the whole team will take it forward to the whole team of tutors. And all the best, guys, with your exams. And we are here to assist whenever you need the assistance. Yeah, and it's 20:02 now. I don't want to get emotional. It's on a Friday evening. I do not want to get emotional, but we do take the comments that you're grateful, La Leboga, and that we have helped you guys, and we wish you all the best for the exams. And with that, I would like to close the class and say thank you, Tendo. Thank you, Tracy. Thank you, welcome,
Oh.
for running the class with me today. I really appreciate it. And we see the hearts, we see the clapping of hands. Guys, all the best with the exams. And please just read the instructions and read the question for what it is, because each question is unique in its own way, right? There's no formula. Each question is unique. You just need to understand the concept. You need to understand the concept. Okay, we see the raising of hands and the clapping of hands. Colleagues, all the best with the exams. And goodbye. I would like to close the class now. It's 20:05. Good night.
Thanks, everyone.
Thank you
Bye.
so much.
Thank you, everyone.
Thank you.